Hi, I'm Terry, Fund Manager for the Passive Portfolio range at AJ Bell, and I'm here to run you through the events of the first quarter of 2021 and their impact on the performance of the AJ Bell fund range. The second half of 2020 saw an increased appetite for riskier assets, a trend which has so far continued into 2021. So it was no surprise to see stocks outperforming bonds in the quarter as investors remain confident on the prospects for economic growth. This positive outlook, combined with the massive financial support of the authorities, saw the first stirrings of inflationary pressures within markets, and this in turn caused interest rates to reprice up sharply, with government bond yields rising in most developed markets. In spite of these rising inflation expectations, the prospect of economies opening back up post the COVID-19 lockdowns gave equity investors all of the encouragement that they needed to continue to drive up valuations. In many instances, investors even began to reprice the prospects for less fancy businesses, with out-of-favour companies catching up to their higher-flying peers. The MSCI World Energy Sector Index, for example, was up over 20% for the quarter in sterling terms. During the second half of 2020, the team were comfortable with our positioning in the AJ Bell funds, believing we were appropriately invested for the environment which we expected to encounter. We do, however, review our positioning at least once a year, and in February, as part of our annual asset allocation review, we made notable changes to the underlying asset classes and holdings within the funds. These changes helped us prepare for the likelihood that assets may begin to behave differently in 2021 and beyond as the significant events of 2020 begin to shake out. We updated investors on the details of these moves in February, and you can learn more by following the link in the video description on this page. In Q4 last year, we were delighted to launch the newest addition to the range with the AJ Bell Responsible Growth Fund. Whilst 2020 may be remembered mostly for the impact of the pandemic, it was also the year that responsible investment went mainstream, with records being set for the number of responsible funds launched, as well as for investor flows into responsible products. Data from the Investment Association to the end of January 2021 showed that assets under management in responsible investment funds had swelled to £57 billion, growing 66% over the prior 12 months. This compares with growth of 7% across funds overall, as investors in the UK added almost £1 billion a month on average to responsible fund products. Although regulations prohibit us from talking about performance in the responsible fund until the fund has a full 12 months of data, the team are very pleased so far and happy with the strong investor interest since launch. The AJ Bell funds operate with a capped cost structure, which means, as demand and scale in the funds grows, we can pass on the benefits to our investors in the form of lower total fees. It was pleasing to see costs continue to fall on some funds in the AJ Bell fund range over this quarter, and we look forward to updating our investors about further cost reductions on the range in due course. With 2020 now firmly in the rearview mirror, the team were pleased to see the majority of the funds post positive gains in the first quarter, with only the two lowest risk funds seeing small falls. All funds with a 3-year track record also remained in the top half and, in some cases, the top 25% of performers in their respective investment association sectors over the 3-year period. The team continually monitor the marketplace to ensure the products we use are appropriate and efficient for our investors. And, as always, we remain vigilant and stand ready to act should we see anything that we believe may harm our future investor returns. Thanks for watching.